everyone. It's James for the Property Education Company. I'm exceptionally gratitude for Joe Fekete joining us today, who is part of the CFO Centre and a CFO for hire. So Joe has over 20 years of experience as a CFO from all sorts of industries, from mining technology, working from small to medium to large companies, and he's been gracious enough to join us today to have a chat. So thank you so much, Joe. Really appreciate it.
Thanks very much, James. It's great to be here and for all the different people that will see this and want to know what an outsourced CFO does, or a fractional CFO, or just a project CFO. Yeah,
So
there's a lot of different things we do. And whilst we talk about ourselves as a primary person being a CFO, we're not just a CFO. We're a strategist, we're a partner in the business, we're a board member, a person that looks at the business as if it was their business, and whether it be a family-owned business, whether it be an SME or even an ASX-listed business where they already have a CFO, but the CFO has so much work on their plates that they need someone else to sort of circle the wagons and make sure that things happen a way that they should happen within the business accordingly. So whilst we started off talking about a CFO, I'm really a person who is a partner in a business to ensure that the business becomes what the owners or shareholders want it to be. There's a top-down and a bottom-up approach in all of this, and the top-down being you're talking to board members, you're talking to management about what their strategies are and what they want to achieve. And then from the bottom up, you're talking to all the people in the warehouse, the operations and administration, and talking about what's inhibiting their process, getting to where they want to go and making the business more profitable, and so on and so on. So there's a lot of different things that fall into play, but each business is different. Whilst everybody has focuses, and whether it be cash flow, whether it be asset building, whether it be profitability, there's all different aspects of a business that get looked at to make sure the business is successful. A CFO, in essence, is a senior professional who is not just an accountant. They have lots of other experiences that they bring to the party, whether it's managing and reviewing of the business. We tend to sit there and be that voice. We don't make any assertions or decisions. We look at the business and we're pretty black and white in what's going on and what's happening. And then from there, you then align the outcomes to what the business want. And that's what we do in essence.
yeah. So what got you into becoming a CFO? Where did you become like being a CFO of multiple companies and being on the board from what we've seen to actually now being a CFO to come in and step into a business and so take the reins and put them in the right direction? So what's that journey like for you?
Oh, look, it all started, I think, being a CFO or starting off as an accountant. Your background is more about what you enjoy doing. And I enjoy looking at numbers. I enjoy looking at a business and saying, well, this is what it is now. What could it be? And as you get more experience in all the different industries that you work in and the type of people that you connect with, it doesn't matter which business a CFO goes into, the different things are all the same. Your balance sheets are all the same. Your P&Ls are all the same. Your cash flows are all the same. It's just more about how that's being manufactured and whether you're getting the outcomes that you require. And therefore, that could also come back down to the people you have and whether they're making the right decisions and whether they have the relevant experience to be able to take this business forward. So I come in as a black and white person. I look at everything that needs to be done, and all of my life, as I've got more experience and being the older owl that flies in to a business to be able to say, this is what's going on, this is what you should look at. And also you ask the questions around what is the real focus of a business. So if we're talking to a business that is privately owned and they have an exit strategy, well, that's a different discussion to a business that says, I've got cash flow issues, or I'm not making enough money, or I have these things I want to do, but strategically it's not happening. Therefore, can you tell me why it's not happening? And therefore, you have to review their operations and come up with, is it the people, or is it the strategy, or is it the actual what you believe needs to happen to create the outcome? And sometimes it's process. So therefore, you don't have the actual right process to create those outcomes. So you have to review your processes, which then aligns the people to your strategy. So it's all of that. And over time, whether it's going into a business and looking at it as an SME, or going into a business looking to sell it, or going into a business looking at how do I raise capital to make this not just a $50 million piece of business, but a $200 million piece of business. I need more capital. How do I raise money? Do I IPO? Do I get private investors? What do I do? And they're all the different things that a fractional CFO or a CFO for hire comes in and does. They review your operations to give you
Right.
outcomes.
Yeah, so it's really giving the point, like discussing what you do in your day to day, coming in and taking the reins, so to say, and deciding, like giving the advice of which way a business really needs to go to meet
Yeah.
their objectives for the short and obviously medium to long term. A really important question is, what are the first three things you look at financially when it comes to any size of business when you step in?
When I come into a business, the first thing I do is really sit down with the managers and the owners. That's the first thing you do, because you've got to understand what keeps them up at night, what's not working, where do they want to be. So that's the first thing. So then from there, that flows back out to your operations, your processes. You look at their balance sheet, you look at their profitability, because profitability creates net cash, and net cash drives the business. You look at the balance sheet and you look and say, well, okay, have I got too much cash sitting there in my debtors and therefore I'm not collecting it? That's creating heartache. Have I got too much stock sitting around? So therefore I've got all this cash sitting in the warehouse rather than in my bank account. And if I've got cash sitting in my warehouse instead of my bank account, means I make different decisions, because I'm not now flushed with funds to be able to make a decision to grow the business. I'm actually trying to keep the business afloat while I'm trying to lower my stock. And so therefore, part of the operation review is, do I have a proper stock ordering process? Am I following one? Am I keeping forward cover correctly? Am I overstocking because I thought I could sell something, but now it becomes, rather than a fast moving item, it's a slow moving item. So now, do I have the strategies or the people to create the strategies to move on those slow moving items, even just to get my money back? Because it's sitting in the warehouse is not helping me. So get it out of the warehouse, get your cash back in the bank, and realign how you drive the business. So they're the three things you pretty much look at as you go.
Yeah. So, what are the most common financial mistakes that you see, particularly in small to medium businesses?
Well, one big problem is always where people don't have the right advice. And if they get into financial difficulties by overstocking or by doing something that didn't work out, they try and they hope that they can fix it on the next contract, or they can fix it on the next quarter or the next half. It doesn't work that way. In other words, you can slowly fix a problem, but you can't fix an immediate problem. Let's say, for instance, you decide that my cash flow is not that bad, so I haven't paid my ATO on time, or I haven't paid my super on time, things like that. You can't keep pushing things backwards to the never never, because they will always come to roost. So you've got to have something in place, whether it's a finance model, that being, yes, you might have a bank account, but you need to have a facility in place so that you can draw down a small amount of money for times when you need to cover something that you haven't done properly. The other things is overstocking. A lot of distributors or retailer distributor businesses overstock. They think that they're going to sell something. They didn't have the right strategy. They now have stock, but then they don't have the right strategy to move on all the stock. So it's about realigning your processes there. And really, each business has, depending on which industry you're in, has different and varying issues that have to be combated. Consulting companies, their biggest issue is I've got manpower they've got to pay, consultants I've got to pay. They've done work, so I'm either not collecting my money from my clients correctly, or the work that's been done hasn't been satisfactory, and therefore I'm not actually managing my client to get paid for the work that I've done. So each business has different things that you've got to look at. And one of the things, like, there's accountants out there, lots of accountants, and there's lots of CFOs, but it's more about finding a CFO that understands your business and understands it quickly. Anybody can look at a balance sheet. Anybody can look at a P&L. We can put all of those numbers into AI and get it to do all these lovely little calculations and then come up and tell you what's happening from your margin point of view and your sales and how that compares to budget and everything. But at the end of the day, it's having boots on the ground that understand your business, that understand what levers need to be pulled to flick it to higher sales or better profitability and so on and so on. AI can't tell you all that.
No, it's good, but not quite that good.
Yeah.
So when a business thinks things are going quite well, what is an actual red flag that when you dig deeper, you actually see the underlying cracks in a business, even though they think they're succeeding?
First red flag is every business motto is cash is king. So if your cash is starting to dwindle, even though you're profitable, like, you could be the most profitable business and have no money, and then you go bankrupt because you haven't collected your money, you're sitting in stock or sitting somewhere that you can't get, and you can't pay bills as and when they're due. And whilst you can put off creditors and push a creditor from 30 days to 60 to 90 and hope that it all fixes itself, there are certain people or certain entities you can't push. So if you're falling behind on your regulatory obligations, that will be the biggest red flag that will put a business under. And then that goes back to directors and board members, and because there's direct liabilities back against people who run the business that they haven't done the correct thing.
All right. So in which case, how far forward should a business realistically be forecasting their finances to keep themselves safe?
Well, every business should always be doing their budgets and forecasting forward and then reevaluating those on a quarterly basis. So do your budget, and that normally gets done in April, May before the current year. But then when your September quarter's over, you've got to reforecast the whole year because anything might be changing within your business, one, and the economic climate around you. So you've got to reforecast to say, well, I don't expect that many sales. If I don't expect much sales, well, I've got to adjust what I'm buying. I've got to adjust my people. I don't need that as many people as I thought. Change people from permanent full-time to part-time casual consultants, whatever it takes to realign your structure to your business. So that's what needs to be done.
So in that case, when businesses are looking to expand, what are the typical risk factors that people are looking when they are trying to scale quickly, and when it is appropriate to actually stabilize first rather than scaling quickly?
You should always stabilize first because you can put yourself in a vulnerable position by, it's different if you're a consulting business and you've won a $20 million contract, you have to service that contract. So that you can upscale for. So you get the right people, you've got a contract, you do the contract. So that's fine. But where you can see the business growing because there's more people buying your product or whatever, you can't automatically just upscale it 50% on the hope that your sales stay the same. You've got to keep reforecasting your numbers every month and only buy to your future expectations that are expected in the next 3 months to 6 months, because you can always regulate your suppliers, you can always regulate other people that are going to give you services. And that becomes the administrative nightmare when you're growing, because part of you is just managing and regulating your infrastructure, your strategy, to make sure you don't get too far ahead of yourself.
Right. So we talk about the fact that you should be looking at numbers either quarterly or monthly. Are there any figures that you should be looking at every single week just to make sure your business is ticking along week by week?
Well, a business that does sales or they're doing billings, you
Mm.
should be looking at your sales and your billings on a weekly basis to ensure that, if for a month I'm expected to do $1 million, then each quarter I've expected to do 250,000. So am I on top of it? Am I behind it? What's happening? Find out from your salespeople what's causing the downturn, or if all of a sudden I've got 400,000 instead of 250, is that a blip, or have I forward sold so I don't have to worry about next week? And at the same time, you've got to be on top of your sales funnel, the forward forecasting, and what are all of your salespeople, what are all of your management saying about what's happening in the future? Is the funnel shrinking? The people you're talking to, are they dropping off? Are they not calling you back because they're not as interested as they were a month or 6 weeks ago?
Mm.
So all of the above. You've got to be able to regulate all of that, and that has to be part of your forecasting model.
So when you're stepping into a business for the first time and you're going through their profit and loss and you're looking through their numbers, is there any time that you find some hidden profit that's just lying there untouched by a business?
That can more be in a space where you're doing contract works or a build. You might have you're building a building that's $50 million or $100 million to build the building, and certain things come in at certain times, and sometimes you're paying out more up front, and so therefore the costs are higher, but that's because the iron or the structure or the concrete has all come in at the beginning, and then you don't have much. You've got to look at your project plan as to what revenue you can take at what point in time of a
Mm.
particular project. And whether that be if you're building something, if it's a consulting contract where you're building an IT infrastructure or something like that, it's about hitting the various milestones. So you just got to make sure that if you've hit a milestone, has it been signed off by your client and that everyone's happy? And therefore, if you've hit that milestone, therefore you can say, well, at that point of milestone, that's the amount of revenue I can take to P&L because I've hit a milestone. And then it's just managing the costs that are coming through and making sure that the cost that is coming through is what you budgeted. Because if you all of a sudden, if you're taking costs and your costs are higher, well, then your profitability won't be as high as an actual. Because if you expected $1,000 worth of cost, but it came in at 1,500, you can't be taking your budgeted profit to
Mm.
profit. You've got to realign your job costing and realign what you take to profit.
Right. So when you are reevaluating, so when it comes to what you're budgeting and what you're actually seeing in profit, is there any common implement that when you do step into a business that is an immediate impact or an immediate fix for a lot of businesses?
Well, your accounting system should have a job costing system or a system where you're going to put all of those variables in, and you'll be able to put in each various type of cost that you're going to have, or each type of revenue that you're going to bill for. So you will be able to analyze what's actually happening against the budget, and you should quickly be able to identify if something's over or under on various areas. And that's where the analytics comes in by your CFO, by your analyst within the business to go whether do I take something to profit, or have I taken too much to profit and therefore I've got to adjust it?
And put it back in, obviously. So I want to finish on a really important thing. And from all your experiences and the conversations we've had previously, what separates businesses from those who can turn it around when they are struggling to businesses who just end up being stuck and could go into bankruptcy and shut down?
What the differences are is basically understanding you've got a problem, getting the right people involved. That is, a lot of small businesses, medium-sized businesses, and even businesses turning over $50 million, a lot of them don't have a professional CFO or a person who can identify all these various areas to look at. And whilst they have a capable finance person who's also a capable analyst, they can give them details, but a lot of them don't have the experience to create the solution. So it's about connecting yourself with the right people who you can strategize with to come up with the solution. Because going into administration or liquidation or whatever, that's my last resort. You've tried everything and now I know I can't fix it. But if you understand your problem early, you've got plenty of time and you need to spend the money to make the money. You don't make any money if you don't spend it. So if you're in a position where your business has a problem, you have to spend some money to fix the problem. You can't just hope that it fixes itself, because it won't. So you have to bring in professionals, business coaches, CFOs, strategists, who will then go through your business and go, these are the 5 or 6 different things you need to be working on. These are the priority for the next week, month. Then we need to analyze, and this is your priority for 2 months. This is your priority for 3 months. And that is then to reverse your cash flow problem and any other problem that you have in there. So over a 3-month period. And the other thing that you should always take into account is that you can always talk to people and resolve things. So if you have a cash flow issue and you've got creditors knocking on your door, then sit down with your creditor, be honest about what's going on and how you want to fix it and how you're working, and they'll work with you to help you, give you some timelines. Same with ATO, same with regulatory authorities, and so on and so on. As long as people see that you're trying to do what you're doing and you're filtering through small payments as and when you can, and the problem's being fixed, eventually you'll fix it. The only time that you can't fix it is if all of a sudden you no longer can sell something that you've got a lot of product for, and it's a huge write-off, and which you cannot fund. Things like that. But that means that your previous decisions have been that bad that it's not fixable. But you will be told that by your advisor or CFO in the early days if that's a problem.
Well, thank you so much for your time today, Joe. It was fantastic to go through everything, and you've been a wealth of experience to share. Everyone, just keep in mind this is largely educational and general, that nothing is specific. If you would like to talk to someone like Joe, you're more than welcome to reach out to see if he can be helpful to solve any of your issues, or anyone in the financial sector who would be your own CFO, hopefully, or an accountant in some cases.
The thing is that there's a wealth of knowledge out there, a lot of smart people. Don't hesitate to ask for help, is what you say, because the time you don't ask for help is the time you've given up.
Thank you so much, Joe. That is a great note to finish up on. So,
Thanks, James.
thanks,
Talk
guys.
soon.